Banks deceive us with the notion that our money grows in our bank accounts, but the truth is, it doesn't increase in value or keep up with inflation. In this video, we uncover 6 assets that can protect your wealth from erosion and help you build intergenerational prosperity. Firstly, let's talk about God's money, precious metals like gold, silver, and platinum. Money holds value because it can store wealth for the future, but with governments printing more money to cover deficits, the worth of paper currencies becomes uncertain. That's why financial experts advise allocating a portion of your portfolio to precious metals, as they are scarce and can't be easily replicated. When inflation skyrockets, the value of precious metals rises. For instance, before the 1950s, an ounce of gold was priced at $400, but today, it exceeds $2,000, and experts predict it could reach $10,000 by 2032. That means in just 10 years, your gold investments could multiply by 5. While cash depreciates, gold continues to appreciate. Investing in other precious metals also outperforms keeping money in the bank. If you're unsure about owning physical gold, you can consider investing in gold exchange-traded funds, ETFs, to gain exposure in your portfolio. Investing in gold ETFs provides an affordable option to benefit from gold price fluctuations without the need for physical ownership. Now, let's turn our attention to industrial commodities, the raw materials. While the scarcity of precious metals adds to their value, their inherent utility in various industries makes them indispensable. Take silver, for instance, used extensively in electronics, medical equipment, and nuclear reactors. Similarly, metals like cobalt, nickel, and copper possess unique properties that cannot be easily replicated by alternative materials, driving their high demand in industries. To illustrate this further, cobalt's demand has surged since 2020 due to its essential role in electric vehicle battery production. Consequently, its prices have doubled from $20,000 per ton in 2012 to $40,000 in 2022, a remarkable 100% increase in just 10 years. Therefore, including exposure to these raw materials can significantly enhance your portfolio during periods of high demand. However, acquiring large quantities of raw materials may not be feasible for everyone, and logistical challenges can arise when storing or finding suitable buyers. In such cases, investing in mining company stocks like Rio Tinto, mining-focused mutual funds, or derivatives like futures and options offer excellent alternatives to gain exposure to these valuable resources. 3. Currencies as safe havens. In the realm of fiat currencies, where gold no longer backs any currency, geopolitical stability emerges as a crucial consideration for investment decisions. This explains why the wealthy often entrust their money to Swiss banks. Switzerland, boasting one of the world's strongest economic systems, offers a markedly stable geopolitical environment. Consequently, the Swiss franc has earned recognition as a safe haven asset during periods of turmoil and instability. This observation has been reiterated time and again, notably during the Eurozone debt crisis in 2009 and the global financial crisis in 2008, when significant funds flowed from affected nations to Switzerland to safeguard wealth from currency devaluation. Moreover, the Swiss franc serves as a valuable alternative to the US dollar in international trade. For instance, during the recent Russia-Ukraine crisis, when the U.S. imposed sanctions on Russian energy trades, Russia conducted transactions using the Swiss franc. Such events fueled demand for the Swiss franc, leading to its remarkable appreciation against all other currencies. In early 2023, one Swiss franc was valued at $1.1074, resulting in substantial overnight wealth accumulation for Swiss franc holders. Consequently, esteemed currencies like the Swiss franc, British pound, and Chinese yuan provide a reliable store of value. However, as not everyone can access Swiss bank accounts, currency ETFs and forex brokers, such as Forex.com, facilitate currency exposure for smaller investors with minimal investments starting from $100. 5. Sovereign guarantee. Have you ever closely examined a dollar bill? It bears the inscription, "This note is legal tender for all debts public and private." Have you ever wondered what it signifies? Since 1971, when President Nixon abolished the gold standard, the dollar has obtained legal tender status by U.S. law. This attribute bestowed value upon it as a medium of exchange, leading us to deem it a fitting repayment for goods and services. While no fiat currency is backed by physical assets like gold, they are still regarded as backed by the unwavering trust and credit of the governing authority. In simpler terms, the stability of your money hinges on the stability of the government supporting it. This is why investing in sovereign guarantee is a valuable means of preserving wealth. Governments are typically the last entities to default, as a national default would have far-reaching consequences no strong government would allow. Hence, investing in government securities, known as SECs, is among the safest ways to obtain sovereign guarantee. However, it is advisable to focus on stable government SECs with investment-grade credit ratings. Consider the sovereign debt crisis Greece faced in 2009. Multiple bailouts from the IMF, Eurogroup, and ECB were required to alleviate the company's debt burdens. When investing in SECs, always assess the overall strength of a government on a global scale. In the U.S., you can invest in treasury bills, notes, and bonds to access the benefits of sovereign guarantee. These investments offer superior returns compared to keeping money in a bank, while being supported by the robustness of the U.S. government in the global economy. Small investors have the option to purchase Treasury securities directly from the government through the Treasury Direct portal or from the secondary market. 6. Value stocks and mutual funds. While Treasury investments offer a higher return than cash, they yield lower returns compared to stocks due to their lower risk profile. Although low risk is an important investment criterion, the pursuit of higher returns is a common objective for most investors. Stocks present an excellent avenue to achieve that. Moreover, it's essential to note that not all stocks pose the same level of risk. The stock market is broadly categorized into two types: value stocks and growth stocks. Growth stocks, such as those in the technology sector, carry higher risk due to the potential failure of innovative ideas and technologies. On the other hand, value stocks, exemplified by companies like Nucor that operate in industrial metals, exhibit lower risk due to established and foreseeable demand. Consequently, value stocks with robust fundamentals not only offer steady and stable price appreciation but also provide reliable dividends. However, conducting in-depth research on the fundamentals of each value stock can be time-consuming and burdensome for the average investor. Thus, dividend-focused mutual funds like the Vanguard High Dividend Yield Index Fund Admiral shares, which have a proven track record of stable dividend payments, serve as ideal and affordable investment vehicles for retail investors. 7. Land and real estate. Accountants view land as a non-depreciable asset for a valid reason: it is scarce and consistently in demand. Throughout history, land has remained one of the most valuable resources globally, as it is essential for housing, education, manufacturing, agriculture, and commercial purposes, among others. With a growing global population, the demand for land will only continue to rise. Similarly, residential properties, office spaces, and commercial real estate built on land are always sought after. As a result, both land and real estate serve as excellent hedges against inflation in an investment portfolio. To illustrate, housing prices tripled between 1992 and the 2020s, even after experiencing a significant dip during the 2008 housing bubble, according to a Bloomberg study. Therefore, having exposure to real estate proves advantageous when the value of the dollar diminishes. However, many small investors only consider entering the real estate market later in life, often limiting their perception of real estate to their own homes. While owning a mortgage-free home is a worthy net worth goal for one's 40s, it is advisable to have a stake in the retail property market at any age. Contrary to common belief, gaining real estate exposure does not necessarily require a substantial amount of money. Investors can invest in real estate investment trusts, REITs, which function similarly to mutual funds but focus on real estate. One notable REIT in the U.S. is Ventas Incorporated, VTR, which specializes in healthcare real estate, including senior housing, research facilities, and hospitals. Alternatively, individuals can consider borrowing to invest in rental properties, where rental income covers expenses, mortgage payments, and generates profits. 8. Collectibles encompass a wide range of assets, including vintage cars, rare art pieces, handcrafted luxury handbags, limited edition watches, and iconic books. In the case of regular cars, their value typically depreciates significantly once they hit the road. However, the opposite holds true for vintage cars. They tend to increase in value over time, much like fine wine. For instance, in 2022, a 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe was sold for an astounding €135 million. Only 2 of these cars were ever produced, making them highly coveted collectibles among car enthusiasts. Similarly, in 2017, Leonardo da Vinci's controversial painting Solvatore Mundi fetched a staggering $450 million at a Christie's auction, purchased by a Saudi prince. The affluent are willing to invest substantial amounts in limited edition products because they represent timeless stores of value that can command extraordinary prices when the right buyer is found. However, investing in collectibles can feel like a distant dream for average investors. Online marketplaces like Whatnot offer fantastic opportunities to sell rare baseball cards, comic books, action figures, and more. For those unable to purchase entire collectibles, platforms such as Convi and Masterworks provide the option to invest in partial ownership, allowing individuals to participate in the collectibles market. We eagerly await your thoughts and opinions in the comment section below. Don't hesitate to show your support by liking this video and subscribing to our channel for more engaging content. If you enjoyed this video, be sure to check out the next one in our series.